What's up, everybody? Welcome to the first of many Sunday weekly previews. I'm going to be doing these every Sunday for everybody in the high five trading community. First, I'd like to say thank you all for believing in me. Thank you all for joining the high five trading community. It means so much to me. So many of you have, you know, I, it, you, I, all my expectations have been blown out of the water with how many members we already have, and it's just so amazing, and I'm so blessed and thankful for all of you, and you really will be getting the best of me. I do not take this lightly. I do not take um you all believing in me lightly at all, and I will do everything in my power to make sure I teach you everything I know, and to get you to where you want to go on your financial journey. So I appreciate you all and I love you all. And that's how I wanted to really start off this weekly preview. These are going to be every Sunday, and essentially, it's going to be me going over economic calendar, the markets overall, the trend of the market, my insights on it, any news that we've had, and then going over some watch list stuff, some trades that maybe I'm not in that could be good if you're looking to maybe get into other trades or find other things to add to your watch list or to find possible trades that are ready to execute that I'm not in that you might want to get in, right? And then to obviously go over the high five setup trades that we're in right now. So the only other thing I wanted to address in this first video is that I'm going to be dropping this every Sunday exclusively to the high five trading community, and then basically either Tuesday or Wednesday I might release it to the public. I'm still figuring that out so far. um so essentially, obviously, you guys are going to get it before the week starts, which is very important, and then I might drop maybe not all of it, maybe just clips of it or something like that, or some small areas of it, but just to make sure you all know, like, it's an exclusive for you guys. You guys are getting it first foremost before the week starts, and there's going to be a lag on anything that's given out for free after that. So if anybody has an issue with that, or there's a problem, please let me know and we can discuss it and figure that out. But yeah, I gotta continue to give free content to everybody else, but I just want you all to know, like, you are getting the most and best of me because you are subscribed to me, and I don't take that lightly, like I said. So enough of all that. I love you all. I appreciate all of you, and let's get into it. So first up, we'll talk about economics. Last week, we only really had one primary number come out, the ISM manufacturing PMI, and essentially we beat. Um, we've been beating consistently in December. In December, we consistently beat on retail sales. We beat on, let's see. So we beat on retail sales. We beat on, we had Fed lower rates. We beat on GDP. We beat on PCE, which is core inflation. We beat on CPI. And, we've just been beating all the numbers and expectations and forecasts that they've been putting out there for the economy. And that was one of the biggest reasons that I told you all that, in my opinion, the Fed just came out and nuked the markets, and it was all fear, uncertainty, and doubt, right? And because it was all fear, uncertainty, and doubt, we are seeing what I believe the beginning of a big rebound and parabolic move. So we'll get into that here in a minute, but let's look at the forecast for this week coming up. So this week, I made a post on X, and you guys already all should know I'm really excited about CES 2025. It's the biggest technology event. It's one of the biggest events of the year. Nvidia, Mobileye, as you know, NVTS, Meta, all anybody who's has any kind of futuristic or big and great technology, they're going to be there. They're going to be there, and they're going to be talking about their tech. They're talking about their innovations. And in my post earlier today, I said that I believe that because they are doing this, it's going to create a lot of FOMO, of people, fear of missing out, of people getting into these names, but also hype, right? So so I feel that this CES 2025 event is going to be a big beginning of 2024 again, where everybody starts getting hyped up about AI again and futuristic technology and how that's going to affect the bottom line and revenues and margins. And I feel like this hype is going to build back into this market, and it won't take a lot. Right now, we are on almost extreme fear on the sentiment of the overall markets. So in the economy. So it doesn't take a lot when we're down at fear or extreme fear on the fear and greed index. It doesn't take a lot for that to flip over into, neutral or greed, because all it really takes is people getting hyped up, and then FOMO starts building up, and then people start piling back into these names. Tax loss harvesting season's over, so people aren't really doing that anymore. People, if they were going to take gains, we're into the second week now, and people were going to take gains um to have a year and a half of not paying taxes on those gains. They probably did it last week, and like I told you all, that was met with, I believed it was going to be met with buying, and it was. We had a nice green week, and it was met with buying. So yeah, I think CES 25 is going to be the beginning of 2024 all over again, where people start getting hyped up, and all they can talk about is how great all this AI is and future technology and how it's going to impact revenues and everything. And what is this leading into? We got earnings season coming up again real soon, guys. Earnings season's right around the corner again. So this event perfectly lines up for, okay, yep, it's going to build this hype. And then people are going to start looking at the next earnings, and they're going to say, oh, wow, it was Christmas season and everything. Like, a lot of these companies that probably did really well, especially with retail sales being as good as they were. Amazon's and Meta and all of them, they probably did really, really well with ads and sales and marketplace and all the stuff, right? And yeah, so that's those are my thoughts out loud. Those are my thoughts out loud, everybody. That I we're gonna get into the charts, but I think we're gonna continue this push higher to all time highs, and we might get my very very bullish prediction of all time highs within 2 weeks that I made 1 week ago. So I have till Friday for that to happen. Will it happen? I don't know. I made a small options play on it, very, very small. I'm comfortable losing that entire options play. It was just more so like, when I say things, I want to back it up with at least a small position. I'm not just going to say things to say things. Um, I've really noticed that about X. Um, so many people just like say things to say things. They don't back it up with anything. I'm realizing a lot of people that call themselves traders on X say things that, aren't really, they're not trading. They're not doing anything besides just putting out like uh news headliners. You know what I'm saying? Like, this is how you become a prop, like, I'm not gonna get into all that, whatever. But yeah, I don't want to hate on anybody, but like, you can't say you're a trader and then don't put out like charts or technical analysis or investment theses or anything. I mean, you just literally just put words on a post and then just put it out there about, feel good stuff. Like, to be a great trader, you need to um limit losses, make sure risk to reward is great. Like, just like these one-liners that are just like, okay. And it's fine. I post some of those too, like to build up that um confidence in everybody, and like to show you what it takes. But it's like 1% of the things I post, maybe less. Some people, that's 100% of the things they post. And I'm not trying to hate or anything like that. I'm just speaking out loud, guys. That's something I've really started to notice on X lately. And I'm just like, okay, like, but where you say you're a trader, but where's the trades? Where's the whatever? I mean, I don't know, whatever. Sorry, guys. I'm a talker. Sometimes I get derailed a little bit. Sorry about that. I'm gonna really try to keep these under 30 minutes as best as I can, but there's a lot of information. The good thing is you can skip around, zoom ahead, whatever you need to do. So to get whatever information you need. But just realize these are videos that I go in depth in, and like, there's a lot of information to know and understand. But anyways, back to the economics. So ISM services PMI forecasted to be above where we were last what is this, monthly, yearly? Monthly. So it looks projected to be higher than we were last month, and we're forecasted at 53.5. And essentially this is just your business data and what they're doing, ordering, um basically, how what is the business really buying? Like, what are they buying? A lot of inventory? Are they buying a lot of new products, or are they, really not buying new products and, kind of just keeping the inventory they have right now? It's important, but it's not like I don't think it's like something super, super heavily to rely on. Jolts, job openings, that's very important. Obviously, we want more jobs to be open for more workers, and so we are projected to be lower than the last month. But at the same time, it's the new year, so um, obviously, a lot of those holiday season jobs have been axed now, and so now you have lower amount of jobs. Um, just for that very reason. So I'm not going to read too heavily into that because you're always going to get those typically lower amount of job openings because the prior month in December there was a lot of job openings because they were shorter term job openings because of the holiday season, people taking on more workers to make sure they can, meet the holiday rush. FOMC minutes, this is on Wednesday. Man, I'm not gonna lie, I'm scared. I'll just be honest, I'm scared about these FOMC minutes. FOMC minutes are essentially they're it includes the dot plot and it includes like the Fed's all the Fed's notes and everything on the economy and like what they were talking about during their meetings behind closed doors. So I'm a little scared about this because Fed Chair Powell absolutely nuked the markets a couple weeks ago, like I told you, with all that fear, uncertainty, and doubt. And so in these minutes, you could get a lot of that fear, uncertainty, and doubt on paper, and maybe it's worse. Hopefully, it's less than what he said. But if there's a lot of fear, uncertainty, and doubt again in this, and this could, I don't believe it can nuke the markets like he already did because that just caught everybody off guard the way he did it. Nobody was really expecting such a I mean, people were expecting him to be a little hawkish, but he was just a complete like nuclear bomb that just hit. Okay. Nobody was expecting him to be like that hawkish and just spreading that fear, uncertainty, and doubt about everything. So this could be just be careful on this day. This could be a bit of you know, a pullback or a red day that we could see on Wednesday. Um, I still think we're going higher, like I said, for the overall week and everything, but this could just have like that initial knee jerk, like 1% move down in the markets, pre-market or something, and then or not pre-market, 2 p.m. So to end the day, we might finish, down or break even. Where in the beginning of the day we might be up or something like that. I don't know. Wednesday's just gonna be a weird day. I'm a little worried about it, but not worried like completely overall because what was said was already said. The nuke was already dropped. So at this point, this is just like radiation at this point. So could be a little bad, obviously. Could be bad with radiation. But yeah, I'm a little worried about it, but I'm not gonna like be overly worried about the markets continuing to fall lower because I feel like we already had our pullback. Non-farm payroll this is really important. It's slated to be lower than the prior month, but again, we have um we have a lot of jobs going away and yeah, I mean, hopefully we can come in and beat this number, right? We just want to see beats across the board, honestly, guys. I'm not going to get too in detail. This is probably, yeah, this is the most important on this whole chart of economic data coming up. This is going to be Friday at 8:30. This is the most important. We really, really want to be in line or below unemployment rate. We do not want to see a 4.3 or 4.4. we want to see a 4.1, 4.2 as forecasted, or 4% unemployment rate, because that'll show that the labor market's still healthy and good, and people won't be freaked out if we jump up to 4.3, 4.4. We really don't want to see unemployment really getting away from us again. Michigan consumer sentiment. This is going to be um, hopefully in line or higher. I would like to see a 76 or higher, and this just shows, it's a questionnaire across the U.S. 500 interviews are conducted, and basically, it's really just to gauge where the modern day American consumer is at with, um, the prices of things, where things are at economically, how they're doing in their household, so on and so forth. We really want this over 100, but you know, at as of right now, we just want to see it consistently climbing. You saw it was at 65, and then if we go farther back, it was even lower due to inflation and interest rates and everything. So, yeah, that's the economic preview. Again, the one mini nuke could possibly be FOMC minutes. Besides that, we want to see everything come in line or beat. And then the two really important things would probably be your unemployment rate and your consumer sentiment on this entire list. So now that that's done, we can get in a little further. We can look at the QQQ here on the monthly. Sorry, 16 minutes. Sorry, we're gonna cruise. Um, QQQ on the monthly. So I look at the monthly overall to see the direction of the overall markets, as you all know. And as we see here, we are up. We've been uptrending for, you know, a while now after we had this nice big correction in 2021 and 2022, after we had, the massive bull run. And then this would have been uh your bear um your bear market, and then we got another bull market running here, and we've had our pullbacks, we've had our small corrections, and right now we have this hammer candle, which hammer candles are a reversal candlestick, or a reversal signal. And essentially, when we get them, it means that we typically are going to have a reversal of a downtrend. But you can also use hammer candles when you get pullbacks or corrections, and they could mark the bottom of those pullbacks or corrections. And what have we had so far since the Fed nuked the market? We have had a nice 6% pullback on the Qs and the SPY right now. So we have on the monthly candle, which is beautiful. We have a hammer candle forming, but this is a monthly candle, so it takes in the whole month of January. So the likelihood of this being the same at the end of the month is not likely. But as we're going to get into on the weekly charts and everything like that, you're going to see that we also have those hammer candles already formed on a weekly chart for the first week of January, which was last week. But the biggest thing I want to always point out, and I'm not going to spend too much time on the monthly charts because they're pretty simple. High five indicators green. Green is good. Williams consolidation box. We are staying within those confines. It's good. Unless we break this support right here, we are going to be okay. That's really it for the monthly. Same thing here on the SPY. Sorry, don't mind all this craziness. Same thing here. We're uptrending. We're green on the high five indicator, and we are within the Williams consolidation box, and we are staying above this support. Also, just so you know, this box could actually be and should actually be down here, because we ran up above -20, our first pullback area, just above -50 really, but preferably above negative, 45, 40, just depending. This is a big pullback we had here, but um where we get this and create support, we are good within there. But I'm drawing it up here just because I want to stay on top of it a little bit more, to make sure, as long as we stay in with this tight one, then we are gonna continue to stay tight as we climb up and not have any, big, to come down here, that would probably be a 10%, so we're talking about a correction territory. IWM, um, this one's all out of whack, and you see we broke this support and we're down here. This one's really volatile. You know, we had this big um rounded bottom here. Um, yeah, I'm bullish on the IWM, but the Williams consolidation box is completely out, and we're red on a monthly. Um, Trust me, I know that it looks very bearish on everything, but um, yeah, I just think it's short term red because what you're seeing on the QQQ and SPY, and like I've already said multiple times, the IWM typically at the end of bull runs makes a massive run and catch up to the SPY, and yeah, trust me, guys, I'm not gambling on this. I'm not having positions based on this and stuff. You know, I'm really just it's not a trade for me. So with that being said, we can like look at things and kind of base them off of that. You know, if this was a trade and this was doing all this, then I'd sit here and most likely get out. But we have to take in everything into consideration, like I always say with the markets, because you know, when the Fed nuked the market, that just jacked up everything, honestly. So you got to take everything in consideration. And yeah, it is what it is. And now that I'm thinking about it, honestly, guys, I'm probably going to make two videos. I'm going to make this video about just a market preview and everything. And then I'll make the next video about, um, you know, positions and everything. So just for this one, just because I've talked a lot about everything. Um, all right, let's continue. So we have, man, why did this all get messed up? I had it all set up perfect. Let's see. All right. So, oh my gosh. Sorry, guys. Bear with me one second. All right. So, on the weekly chart of the QQQ, we, like I said, on the monthly, we're still good and everything. But on the weekly chart, we did bust out of our Williams consolidation box. And, you know, that didn't look good at all. It didn't look good. Um, but what I will say is that we had this correction, we had we had this pullback down here for about a 6% pullback. We had a 6% pullback, and as you all know, last week we had this massive wick higher. We have this hammer candle that's formed. So we had this pullback, and then we had this hammer candle form last week going to CES 2025. So, in my opinion, and based on what the charts are telling me, we're still green on the high five indicator. Yes, the Williams consolidation box is jacked up, right? But that's what happens when you have this massive nuking of the markets this 1 week by the Fed, where we drop 2.5%, sometimes more. And yeah, so we basically kind of pretty much retested this previous resistance, and we are basically flipping it into support. So this was once resistance, and then we wicked off of it once. We now wicked off of it twice while creating a hammer candle, which again is a reversal signal, not just for downtrends, but also for pullbacks and corrections. So we have this beautiful hammer candle, and now I believe we will continue higher. We could see a week. My break even point on that one option, that small option that I have, is 527. I believe we could with CES, climb up here to 530 before we face some resistance right here again. So I believe I could be get into the money on my call option this week. We'll see. Do we go to all-time highs this week? That's going to be a tough call. That's going to be really tough, honestly. But hey, if we get back up there, then I'll, make a little bit of money on my call options. I can exit them, and I won't be able to say I was right, but I can at least say I didn't lose money on that option, and I still put my money where my mouth is. But this is like pretty key support right here from 503 down to about 592, and it's support because you had resistance. You had resistance multiple times, then you broke out, right? And then you pulled back and you created this resistance into support because you pulled back to it, you confirmed it, you moved higher, then you pulled back to it again, you wicked off of it. So now this is pretty strong support in this area, right? It's also an ascending triangle pattern. So with the ascending triangle pattern, that's where I got my measured moves up to 580. And so our profit target up to 580 is our measured move. And then our other profit target of 560 is a separate measured move for a different charting pattern. So basically, everything looks great on the QQQ besides our Williams consolidation box. That is the only hiccup that we have. I'd really like to see us move higher and get back into this and then kind of create a new and continue to go back and forth. Next up we have the SPY, and same thing here, guys. You can, our Williams consolidation box is jacked up. This one's actually a little bit better because you can just do this, and then there you go. You're still in the Williams consolidation box. It was a big pullback here, and I don't like to go that far back on the support being created, but nevertheless, we are still within the Williams consolidation box. But I did have it drawn up here, and now obviously we are not in that anymore. But I will move it down here just to kind of give it some room because everything else we are seeing looks good. We have a measured move to 650, and essentially we had this previous resistance flipped into support. We wicked off of it now once, twice, and then no. So we had this previous resistance. We broke that previous resistance, as you see. We retested it. We came back, retested it. We confirmed the bounce off of it. We came back again twice now, wicked off that previous resistance, turned into support. And now this support area right here from 585 to about 580. This is very strong support now because of how many times because of how it was a support and resistance zone now into a major support zone, as you see, right? And the biggest thing you need to know, when we wick off these bottoms like we do, like you see here, that is very, very bullish, and also indicates how strong the support area is. When we wick off this, it shows that it's a very strong area. And like I already was telling you, we want to stay above the 9 EMA on the QQQ, and that's what we did. We did fall below it, but then we immediately wicked back up above it to end the week. And the way I see wicks is when we wick down, when we wick below, when we crash down below something, if we end that weekly candle or a daily candle or whatever candle, if we end that back above that area, I basically cut off that wick and I say, okay, we ended up here. So we still got the bounce. It was just a liquidity grab or some kind of like flash crash to basically fly under that support area. But where we ended is what I really care about. And this wick, I cut it off in that layman's terms, but I still look at it and I say, man, that's really bullish that we were able to wick all the way down there and wick off of that and all the way back up above where I was talking about, above that support. So for here, it's the 580 to 585 support, but not just that. On the S&P 500 and the SPY here, like I told you, we want to be above this smoothing line of our high five indicator and 9 EMA line. We want to be above that, and we wicked below that as well, but we wicked straight back up, or we crashed below that, then we wicked straight back up, and then we formed another hammer candle at the bottom of our pullback area, which indicates a reversal of the pullback to a move higher and a continued bull run up to 606 and then our profit target of 650 for 2025. So as you can see, everything is very bullish besides the Williams consolidation box. Those really got jacked up, but that's what's going to happen. Just like you see with HIMS, that's what's going to happen whenever something as crazy as like the Fed coming out and nuking the markets when nobody expected him to do that happens. And lastly, the IWM, it's the only index that we cover that's red on the monthly and obviously the weekly, it's the only one that's red. But like I said, it's been red before in a very short time because of a flash crash like we saw, and I believe that's what we're getting right now. And the reason I'm still bullish on the IWM overall, besides what I've already said with how it needs to play catch up with the SP 500 and the QQQ, and how the IWM typically runs at the end of a bull run and caps off the bull run, and the small caps running like we saw in end of 2021, 2022, before we had the um, you know, you can call it a crash, I guess, before we had the crash. Um, before we had the crash in 2022 and 2023, the massive correction and crash we had, I would call it. We saw that final big run and parabolic move in small caps world. And I think we could see that again. And other things that make me bullish about this is that we were in this uptrend. We're at the bottom. We're at the bottom of this uptrend, meaning that we should be getting a bounce soon, like we see that we are getting. We had this massive multi-year cup and handle pattern dating back to 2021, beginning of 2021. And basically, we had this resistance, 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 resistance. We broke the resistance. Now we are coming back to retest the resistance. And if we confirm and bounce back up here, then we have just turned this massive amount of resistance here into what? Support. That'll be flipped in from resistance to support. Will continue higher. And now this area right here will always be known if we get a big correction or crash, that this area right here is massive support for the IWM and the Russell 2000. Also, we have this massive volume shelf that we see here. Yes, the Williams consolidation box and the Williams percentage range is completely jacked up, like I already told you, but it's for all these other reasons that I'm bullish and I'm willing to look past the Williams consolidation box because of what the Fed did and how big of a volatility spike that was, because you don't get those volatility spikes that often. So when you do get them, especially in one day that was bigger than the Japanese trade crisis, when you get them, it's it's gonna mess up markets. It's gonna jack things up, and it's gonna go after the things that are most um the things that are most volatile and the things that are most risky, which is Russell 2000 stocks, right? They're small caps, they're very risky. So with all that being said, we're looking good here. We are bouncing. We are green. If we engulf over this previous week's high at about 226.14, that'd be very bullish. It would send us in this volume gap and probably send us up to about 235 to 240 area. So yeah, I'm not worried about the IWM. Now, if we break underneath here, break out of this bullish channel, break below this cup and handle pattern, break underneath this volume shelf, then yeah, I mean, it's time to really get concerned about the IWM and this thing really just crashing, honestly, at that point. So that's what I'm seeing on the markets with those. The VIX, real quick, we'll go into this. We call this spot on. I know Mustafa in the community made some money on the on some puts on the VIX, which is super awesome. I love that. Yeah, like I was talking about, we got a bear. We have a spike. We create a bear flag. We break. We fall down massively. We have a spike. Bull flag is created. We fall down massively. We have a large spike like we had in December, and this was bigger than the Japanese trade crisis, the one day back here. We have this massive spike. We have a massive fall down. We have a kickback up, which starts scaring people again, right? But then we create this bull flag, and then what did we do? We broke it. We broke the bull flag to the downside. So one or two things are going to happen, and one thing overall is going to continue to happen. It's going to continue to fall. But first, it'll either continue to fall hard, or maybe those Fed minutes come out, those FOMC minutes come out, right? And we get a push back to retest the breakout area, right? Because just because we're going down doesn't mean it doesn't all work the same. So we get a uh, a push back up to retest this breakout area and then continue to fall, or we just continue to fall. Like I always tell you all, 60 to 70% of breakouts retest before they continue their path and the direction that they are going. So, like I said, those FOMC minutes kind of scare me a little bit, and that could cause us to spike back up on the VIX, at least to here in this area, to retest that bull flag breakout to the downside before we continue lower. Or that could be a nothing burger and everything's good and great. And then we continue to fall like we saw here. Like we could see that continuation to fall down to about 14 or $13 or 14 or 13 on the VIX. Yeah. Somebody was saying like I've never seen anybody chart the VIX before. You could chart I could chart a mountain if I really wanted to, everybody. Like you can chart anything, okay? Anything. Um But yeah, so yeah, this video was long, 36 minutes, but it was a complete video about the stock market, my preview, where I think we're going. And if you haven't caught on yet, I think we're going higher. And like I said, I think like I said, my 2025 preview. If you haven't watched that, check it out on X. I posted it. And that's where I think we're going in 2025. I think we could have a major correction or crash at some point, but that's just a feeling type thing. I will always monitor this monthly Williams consolidation box because this correlates when we do get that breakdown. That typically does correlate with a big correction or crash. So at that point, when we get that big breakdown and flip to red on the Williams or on the high five indicator, that's whenever I'll get very bearish. And then we'll start talking about low five setups and we'll start talking about shorting companies instead of going long on companies, right? There's going to be some companies we'll still want to go long on for the long term, but that's investment, not trading. So that's all I got for the market preview for the actual overall market and stocks. And then, like I said, I'll make another shorter video just going over some setups, going over a watch list, and going over some trades I want to talk about. And just so you know, I really want to create 30-minute videos for this weekly preview. I can't be doing an hourly video every Sunday. There was just a lot to talk about in this video. And then obviously we were talking about the community and how awesome I am, how awesome it is to have you all in the community and how appreciative I am of all of you believing in me. And I truly appreciate you all. And I truly hope that I can teach you everything I know and teach you how to become profitable traders and just really help you in your financial journey. So I will release this and then I'll catch you guys in the video I make later today for all of these stocks. Awesome. Thank you all again. Love you all. See you in the next one.